You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show on Canada Day, David.
Hello, Jim. It sure is beautiful weather out here.
It's great. Time to get out there and wave some flags this week on both sides of the border.
Sounds
Today,
good to me.
We're going to talk about improving your money over the next 5 years using gold and silver. Maybe explain the plan.
Well, this will be an interesting plan from an academic and a practical perspective. And I've just been thinking about what I think that the price of gold and silver may do over the next 4 or 5 years. And one of the things that I think is important is for us to have a big enough picture to encompass the possibility of gains that are maybe a whole lot more than most of us think is likely or possible at this time. And at the same time, come up with some ideas about just how much you might be able to make in the case that we do have a rip-roaring bull market that gets going here with the indications that we have now that we may have seen the lows from the last 3 years of the cyclical bear market in the metals.
A lot of people are predicting that gold is going to hit 1450, 1470 this year. But that depends,
I guess. Well, it's a real possibility, and I think if we get above 1500, I think that will be really important. In fact, even the level that you mentioned is important, 1450 to 1550. If we can build a base above that level, that will put the rest of the argument that the bears have that we have a market that's just not going to be able to go up and stay up.
What's the big argument against gold going up that high?
All the different levels that it would have to penetrate on the upside, which are now resistance, and this is certainly true at this point. But the fact is that if you look at the systemic issues that caused gold and silver to begin rising a decade ago, they're still here now in even greater force than before. And I would argue that a lot of the ones don't involve social destruction and political unrest and all this kind of stuff, but actually involve the increasing wealth of a large portion of the people on the globe who, when they get more disposable income, are inclined to put a certain amount of it into precious metals as a vehicle for storage, value, and also for beauty and appreciation.
Yeah, it's not often you talk about an investment being a beauty, but when it comes to gold, if you're collecting jewelry, for example, you have both the artistry and the metal itself.
That's really true, and it's the same thing with collecting nuggets, which if I had a lot of disposable income, I'm sure I would find myself buying some of these beautiful specimens just like a lot of people do artwork, which arguably a case can be made that gold nuggets are a form of artwork, nature's artwork.
I was going to say, yeah, Mother Nature was busy at the lathe, charging all those things up. Now, on the precious metals market, platinum has hit a new high for the year, I believe.
We broke out this morning. That's up about $30-some today on platinum. Palladium is up strongly. It's only about $10 from its breakdown point for when the mining strike was issued. So those are looking pretty good. It looks like we could see an explosive breakout on the upside there, which you and I have been talking about for the last couple of years. You know what I was thinking on this topic today about talking about how much money we might be able to make over the next 4 or 5 years if our premise is correct about a very large up move in gold and silver going up to nominal highs and well above that. It seems to me if you look at where prices of the mining stocks are now in relationship to where they were just 3 years ago, most of the good ones still are about 75 or 80% below those 2001 highs. So I think it's realistic to assume that a person that is buying in the area that we've seen over the last month or so, or maybe the next month or so going on, they should be able to consider on a good stock of making about at least three times their money, perhaps 4 times as much, by the time these stocks get up to where they were in 2011. Then, at that point, we get to the point where we have new nominal highs in gold and silver, which would be above 1900, let's say above 2000 in gold, and above $50 in silver. Then I think it's possible to make another 3 times a person's money going into the late accumulation phase that precedes the mania blow-off for the metals. And so by that point, you'd have about 6 or 7 times your money. And then in the blow-off phase, where prices go vertical, I think a person can make another 3 times their money, and certainly that would be conservative at that point in relationship to how fast the prices would be going up. And we could even see something like this happening without some of the gigantic highs that some people are predicting, $20,000 gold and $500 silver. I think you could have this happen and make 10 times your money if silver went to even $100 an ounce or 80, someplace between $80 and $120 an ounce, and say gold around $5,000 an ounce. Those are reasonably conservative figures, all things considered. And I think the reason that I would like to, mention this today about thinking about making 10 times your money is that it provides a perspective. Now, maybe somebody else would think, oh, that's too optimistic. We can only make 6 times. Well, that's fine. But you come up with what you think is reasonable and what is possible and even what is probable, and then adjust your buying and selling accordingly. And I think if you don't have a big picture like that, what can happen is that you get a nice move. Let's say you bought silver at $20 and it goes to $26, and you bought some of these mining stocks at $1 and they're $2.50 or $3, and you're tempted to just blow it all out and then try to buy it back on a big decline, which may or may not ever come. But if you really think that these higher prices are probable, if not possible, then what you'll do is you'll be selling smaller into the rises, and you'll be buying into declines rather than buying rises themselves, and that will help you maximize the profit potential for what you might be able to accomplish.
Some interesting news from the Canadian Mint. They're going to start cranking out some new gold coins, one worth $1,000 and the other one $1,250. They're pure gold. Is that a good investment?
Well, for most of it's probably a little bit above our profit potential to get in without taking out a large loan. I don't know what the premium is on that in relationship to the gold and silver, but there's a lot worse things than you can do than buy American Silver Eagle and Canadian Maple Leaf gold and silver coins, not to mention the platinum and palladium. Now, the palladium is not available in the United States in a coin like that, but it is available in Canada. I believe all 4 of the precious metals 4 can be purchased in maple leaf configurations.
And for those who have a big wallet, Canada also has a $1 million gold coin. It's 100 kilos of pure gold. But again, $1 million, that means you're buying this gold at $2.84 an ounce. What they guarantee, though, that is that even if the price of gold goes down to 0, you still get $1 million for that coin. But I don't think the price of gold is ever going to go as low as, say, even $284.
Well, it doesn't seem like that would be the case. We'd have to have a pretty severe depletion to go for that. But I'm sure it'll be a beautiful coin that people will be able to look at under heavy guard and with probably 10 inches of plexiglass so that it can't be hacked away with some type of a hammer.
Well, it's been big business for the Canadian Mint. These special collector coins, $1 million coin, $100,000 coin, they sold $167 million worth of those coins last year.
That's really amazing. And I just read a statistic this morning that if the sales of American Silver Eagles continue at their present pace, we could see a 50 million ounce year at the end of this year for the year on the American Silver Eagles. And I'm guessing that the Canadian Maple Leafs won't be too far behind in their respective sales records being set. Does
the U.S. restrict silver collected for their mint to be only from the U.S.?
That's the way the law is written now, but if they did not have enough to meet it that way, I'm sure they could change the law because they're not going to try to not be able to have silver and push the premiums up triple what they are now. But that is the way the law is written correctly, that the American Silver Eagles, the Mint uses for their American, any of their silver products have to be from U.S. production.
David, again, happy Canada Day, happy Independence Day.
The same to you, Jim. It's been great talking with you.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HoweStreet.com. I'm Jim Goddard.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.